Hey guys, what's up? Welcome to another video. I know this has been a long ass time since I made a video, right? So in today's video, I'm going to be breaking down NFP price action for gold using ICT concepts, all right? So over here, you can see that my bias predictor is saying that we're going to be bearish for the entire day, and that's what NFP actually provided us. And we all took the sales from up over here and down over here, closing it out right here, okay? And the bias for the PM session, as you can see right now, is bullish. You can't see it over here, but it's part of the nose that I'm working with. It's bullish. You can see the nice move up over there. Okay, but over here today now, what we're going to do is we're going to talk about how we could have gotten in longs up until NFP. Okay, up until NFP. The reason why I'm saying that, okay, this is actually doable is because there's price is drawn to POIs, right? Either it's liquidity or it's going to be a fair value gap. So for me, I use Malaysian SNR and the SNR level was up over here. So using that as your context, let's dive right in. Right, so over here, during the London session, let me just take all this out. During the London session, right, you can see price kind of drop down and start going up, right? So we got in longs over here as well. But now from an ICT based perspective of things, right? If you consider this low right here, this is your Asian low. Okay, that's your Asian low. And if you look at the dollar index with the Asian low and basically with gold, you can see that we did have an SMT divergence. Yeah. So we can clearly see that there was really no necessity for taking out the Asian low as long as price started driving higher. So in this case, how am I going to measure or gauge a change in the state of delivery? Yeah. So you can see here we have a fair value gap. Okay. It's a fair value gap right there. Right. When price trades through the 50% of the fair value gap, you can use it as an inverse fair value gap, right? So this is your entry point number one. All right, so this is your entry point number one. Okay, right there. You keep your stop at the low. Now, in terms of your targets, right? What is your target? Here's what you're gonna do. You're gonna take this dealing range high to this dealing range low, and you're going to target 2 standard deviations. Okay, right there, and you're done. Okay, and you are done. Now let's say that you did not get this. Okay, you did not get this entry. Let's look at price action over here. Now, as price is trading higher, we know that there has been an SMT divergence. Okay, we know that there has been an SMT divergence. So of course, price is going to be in a market maker. What? It's going to be in a market maker buy model. Okay, it's going to be a market maker buy model. So, having seen that, can you see this little stop hunted portion of price right there? Yeah, that's an order block, right? So this order block, what you're going to do is you're going to do that. Drag it out in time. Yeah. When price closes above it, here, actually over here, price has to come down below it, right? So in the meantime, while it was starting to close above it, can you see how we formed liquidity and at the same time we formed a fair value gap? That's entry number 2. Okay, that is entry number 2. Now, with this entry number 2, how am I going to do with my projections? Yeah, see how we have a stop hunt here. So the main swing high is right here, right? Take this swing high, drag it down. Okay, drag it down. Stop loss below this candle or below this candle. 2 standard deviations upon NFP release. That's your trade. Okay, that is your trade. After we ran up, started going down, right? Started going down right here. How am I going to get my sell off? Because that's the actual bias for the day. The actual bias for the day is to go short, right? How am I actually going to get my sell? Yeah, that's the biggest question over here. So when I'm looking at this right here, yeah, this one, this gap you see that you see right here, it's not a fair value gap. In my book, this is not a fair value gap. It's just a liquidity void. It's meant to be filled, not to be reversed from. Okay. So this is the 5-minute chart. If I take you to the 3-minute chart, yeah, on the 3-minute chart, we have a gap there. Okay. Also, we have a stop hunt and price drops down. So this stop hunt, we can see how price kind of closed outside, actually closed inside with a wick outside. Yeah, so price must go into that rejection block to actually sell off, but it didn't do that. This is where multi-time frame analysis comes into play, right? Yeah. Do we get it still? No. Go to the 1-minute chart. What do I have? What do I have? I have this candle right here. Does price go into it? Unfortunately not. Check the 5-minute chart again. Now the 5-minute chart, what do I have? Still nothing. Okay, fine. 15-minute chart. Can I literally see anything at all that could, benefit me? I have this entire wick over here. I know that there's a POI over here, right? So when I see this wick, I'm going to use the entire wick. Why? Because a wick is a gap. Okay, a wick is a gap, and price will use this to go lower. This was where one of my entries were. Okay, you can see it's on Instagram on this day. On this day, February 1st, 2023. Not February 1st, sorry, September 1st, 2023 on a Friday, NFP Friday, I posted on my Instagram. You can also check it on my business Instagram as well. So the entry was right there. Stops was for 20 pips. And as for my take profit was based on this right here. Yeah, that was my actual take profit. And this, guys, is entry number 3. Okay. Now, as for the actual trades I took today, yeah, as for the actual trades I took today, it would be this. I took this long. I did not take this long because I was short, actually. Okay. I was actually short. There was a little bit of a misgiving in my analysis, and I was actually short. So I took a loss where I should not have taken a loss. Okay, right here. I got in these shorts, everything documented on Instagram. You guys can go take a look, and as well as my free public Telegram group. All right. So that's pretty much it over here. That these are the entries, right? And for now, I'm still looking for shorts on gold, even though I have a long bias for the PM session because I have a POI that's literally down here. So I want to see price try and make a move for that. But apart from that, I'd say that the long move has already happened. And since it's Friday, price is going to close off anyway. So yeah, with that said, guys, I hope you found this insightful. I'm definitely going to do more breakdown videos as well. I'm going to show you guys how I use the bias predictor and how I use my own concepts as well in the coming days or in the coming weeks, right? So it's going to be a major part of this YouTube channel. So if you do like it, please do share it around and like, comment, and subscribe. Okay. It's going to be worth it. And also, when I do my webinars, my free webinars, be sure to join because I mean free knowledge, right? Free knowledge. So be sure to join. Let me know what you think. So yeah, join my free public Telegram group. Follow me on Instagram, on all my socials, my real estate, my consulting business, as well as the trading academy. All right. So with that said, I'll see you guys in the next one. Good luck and good trading. Bye-bye.